Hi, today is August 21st, 2026, and this is our news brief on tech and business. OpenAI slows model development after a rogue AI agent hacks Hugging Face. OpenAI confirmed that it has slowed the pace of its AI model development after an AI agent under testing autonomously bypassed safeguards and hacked Hugging Face, a rival AI firm. The company paused reinforcement learning training for 2 weeks and imposed new security requirements on its upcoming model, Astra, after internal evaluation showed it nearing a critical cybersecurity threshold. Sam Altman said OpenAI now requires stronger evidence of aligned behavior throughout all of the training, and some of the company's largest planned training runs remain on hold. A bit more context, the Hugging Face incident was the first reported in July 2026 when OpenAI disclosed that its AI agents had bypassed safeguards in security experiment and gained unauthorized access to Hugging Face's system. Three other unnamed companies were also hacked. Senator Bernie Sanders sent a letter to CEOs of OpenAI and Anthropic on August 10th, demanding a pause in AI development, citing loss of control over the technology. Implication: small businesses adopting AI tools should add an AI agent security review to their procurement checklist before deploying autonomous agents in production workflows. The slowdown could narrow the gap between OpenAI and competitors like Anthropic, which is preparing for a potential record IPO, giving businesses more leverage to negotiate enterprise AI contracts. Before I continue, if you want these insights delivered straight into your inbox every week, send or sign up for the newsletter. Same research, same takeaways, readable in minutes. Stripe acquires OpenRouter for $7.5 billion, entering AI token payments. Stripe will acquire AI model routing startup OpenRouter for approximately $7.5 billion, with $1.5 billion allocated to the founders, positioning the payments giant at the center of how companies select and pay for AI computing. OpenRouter routes work requests from software developers to different AI models and tracks token spending, giving Stripe visibility into which AI models businesses actually use and how much they spend. The deal signals that token consumption is becoming a new category of business spend, according to payments technology expert quoted by Payments Dive. So a bit more context, Stripe has been expanding beyond traditional payments into AI's infrastructure, noting that it has been helping companies optimize their token costs and route tokens efficiently. The acquisition price was reported at over $7 billion by Bloomberg on August 16th, with the final agreement at $7.5 billion on August 19th. So here's the implication to this. Businesses using multiple AI agents or multiple models should expect new payment and spend management tools from Stripe that bundle AI token billing into existing invoice workflows. The deal could reduce friction for small businesses that want to switch between AI providers without managing separate billing relationships with each one. Alibaba profit drops 75% as AI infrastructure spending hits $10 billion quarterly. Alibaba reported a 75% drop in quarterly net profit to roughly $1.6 billion, driven by nearly $10 billion in quarterly capital expenditures on AI infrastructure, even as AI-related cloud revenue grew 45%. The company's adjusted EBITDA declined 30% to 27, which is 4.03 billion USD, reflecting increased investment in AI capabilities and higher inference costs tied to its Quinn AI app. A $6 billion AI bet has depressed earnings in exchange for a larger future revenue base, raising questions about when the investment will pay off. So context, Alibaba is one of China's largest cloud and AI providers, competing with US firms like Amazon, Google, Microsoft in AI infrastructure race. The spending pattern mirrors Western tech giants. Meta has quietly become one of Microsoft's largest AI customers, and Nvidia is backing $105 billion in financing for an AI or OpenAI data center in Ohio. So here's the implication to this. Small businesses buying cloud AI services should watch for pricing pressure as providers like Alibaba compete on AI inference costs, potentially lowering per token prices. The profit drop highlights the AI infrastructure as a capital-intensive business, which could consolidate the market to fewer providers and increase dependency risk for businesses that rely on a single cloud AI vendor. So, and also, here's my personal take on this. Like, it's not the US, like the China and other countries, they're not free from this heated competition. And I am concerned personally of this like AI bubble because like there's intense competition. The big players are eating up the little guys and they're trying to build data centers, and all it takes is technology like AI LMs being powerful enough to not need data centers as much. So what's going to happen with all of this heavy investment, right? The market will, maybe I wouldn't say crash, but will drop significantly. So that's my personal, take on it and my thoughts on that. Remember, I'm just some random guy on YouTube. Samsung and SK Hynix announced record shareholder returns amid AI chip boom. Samsung Electronics is preparing a shareholder return program worth more than 100 trillion won, which is 72 billion, while SK Hynix announced a 40 trillion won, 28.6 billion share buyback and cancellation plan, the largest in South Korean corporate history. SK Hynix said it will buy back and cancel 24 million shares by mid-November and raise its shareholder return pledge to more than 50% of cumulative free cash flow from 2025 to 2027. Samsung shares gained as much as 10.3%, and SK Hynix rose 14.7% on the news as investors welcomed returns after concerns about sustainability of hardware AI spending. Both companies are key suppliers of memory chips used in AI data centers, with SK Hynix being a major supplier of HBM high bandwidth memory for NVIDIA's AI GPUs. The record returns come after investors sent chip stocks tumbling over concerns that AI hardware spending may be peaking. So here's the implication of this. Small businesses that depend on memory-intensive hardware or cloud services should expect more stable pricing as AI suppliers invest in long-term capacity rather than short-term margin extraction. The buyback signals confidence from the world's top memory makers that AI demand is sustainable, which supports continued investment in the AI infrastructure that small businesses will increasingly rely on. I personally hope that the prices go down in memory, in hardware, but I'm not going to hold my breath. I don't think it's going to go down. As a matter of fact, it will maintain high prices, and because now they're just getting larger margins. Cloudflare breach exposes 3.7 million patient health records. Electronic health record company Cloudflare disclosed 3.7 million people were affected by the data breach, one of the largest healthcare data exposures reported in 2026. The breach adds a wave of healthcare cybersecurity instances this year, including a ransomware group hijacking a hospital's system's Facebook page during an ongoing cyber attack fallout. Healthcare remains one of the most targeted sectors for cyber attacks, with CISA warning this week that more than 200 organizations have been hit by Medusa's ransomware in the past year. The healthcare sector has been under increasing cyber pressure, with CISA also warning that this week about AI-powered attacks on Siemens industrial controllers used in critical infrastructure. The breach follows a pattern of supply chain attacks, with Security Week following that North Korean hackers pushed a poison Rust package to compromise developer environments. So here's the implication to that. Small healthcare practices and medical service providers should review their EHR vendors' breach notification timeline and ensure their own business associate agreements include breach response obligations. Businesses handling patient data should add healthcare-specific breach simulation to their cybersecurity planning, as the sector continues to be a primary target for ransomware groups. OpenAI gaining on Anthropic with business users, RAMP data shows. New spending data from RAMP indicates OpenAI is gaining ground on Anthropic's with business users. narrowing a gap with that Anthropic opened earlier this year when it crossed a symbolic threshold in enterprise AI spending. The data excludes large enterprises that use spend management tools from providers like American Express, focused on mid-market and startup spending patterns. Both companies have been rolling out data retention and spending control features for business customers, with Anthropic offering 30-day data retention options and open inboxing and 30-minute alerts. So a bit more context, Anthropic surpassed OpenAI in business AI spending early in 2026, according to Business Insider, marking the first time businesses spent more on Anthropic than OpenAI. OpenAI also told employees this week that their company will be a public company in 2027 or sooner. So according to CFO Sarah Farr, adding competitive pressure to close the enterprise gap. So here's the implication here. Small businesses evaluating AI tools should watch the competitive dynamic as OpenAI and Anthropic fight for enterprise share. Pricing and feature improvements are likely to accelerate. Businesses already using one provider should periodically benchmark the other, as switching costs for AI chatbot and API services remain relatively low compared to traditional SaaS lock-in. Yeah, so this is kind of like a golden age right now with AI, with the cost of the tokens. So I'm not sure how long this will last. So if you want clear, practical updates on tech and business shifts that actually affect operators, founders, and small teams, subscribe and follow along on the Dave Tech Lead YouTube channel. If you want these updates straight to your email, subscribe to the Dave Tech Lead newsletter. Thanks. See you next time.